Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets, the earnings, and SPY for May 29th, 2025. And with that said, let's go ahead and jump straight into this. And I'm going to preface this. I recorded this video already. My microphone cut out, didn't work. I'm very annoyed, upset. I don't have time to record this again, and I'm going to record it anyway. So if I sound tired, if I mispronounce stuff, I apologize. Um, I'm running against the clock right now, and I just don't have a lot of time. So let's get into it very quickly. Yesterday, Wednesday, we didn't have a whole lot of data. We had the 5-year auction come in lower than anticipated. I was expecting a 4.1%. We didn't get that. The FOMC meeting minutes did not provide us any new insight. We know the Fed's doing nothing right now. Um, that's not a big deal. What was important today, though, is we had a court ruling from the Court of International Trade, and that's a super big deal. I'll discuss that in a couple seconds. And we also had NVIDIA earnings. The NVIDIA earnings were slightly less than what was originally anticipated by speculators, but it was still good enough to push the market upward. And along with that CIT court ruling, it really sent the market into a full launch. And let's go into that CIT ruling really quick. Let me change my screen really quick. Hold on, I made this graph for everybody. If it will pull up. Of course, it's not pulling up now. Hold on. Everything is just not working for me today, and I'm trying my best to keep a smile on my face. Okay, there we go. So, made this flowchart, and we've already done this first step. This is the CIT, and CIT stands for Court of International Trade, renders their judgment striking down the tariffs. Okay, that already happened. What happens from here? The DOJ has to file both an appeal and for a stay. Um, they filed for the appeal. That appeal we won't hear from for at least 60 days. That's the latest they can respond to that appeal. But the earliest is from what I read about 30 days. Okay. Um, that's gonna take, you know, they're probably gonna be using almost every single day of that process for court findings, just all sorts of stuff. Now, while that appeal's going on, the DOJ will make an argument for a stay, and the court has the ability to deny that stay, and if that stay is denied, the current tariffs will stay overturned, and no new tariffs can be placed uh, without some additional steps, and I'll discuss that in a minute. If the stay is granted, then the current tariffs stay in effect, but no new tariffs can be written yet. And it will require that process that I just mentioned. And it's actually the basis of why this case was even brought up to begin with. So before I discuss, this last step, let's kind of discuss why this case was brought up. Um, some small American business owners came to the CIT and they argued that the tariffs are currently unfair and unconstitutional because it does not have I'm not going to say this properly. I don't know. I don't remember the exact verbiage, but essentially there's no outline to the tariffs, as in there's no um, duration attached to it. There's no uh, set percentage attached to it. There's no outcome slash goal attached to it. So the argument from these small business owners is that uh, we can't do business around, you know, these tariffs that are just being implemented kind of willy-nilly. Okay, and that's their argument. It's a very fair argument. It's a very fair argument. As much as Some people really want the market to be bullish or bearish right now, and I had plenty of bear positions. I would have been very happy if the market dumped, but sometimes things like this pop up and we just have to react. So, um, yes, this is fair for small business owners. Now, the DOJ is going to file for the stay, and what the DOJ has to um, argue to get the stay granted is that the court overstepped their bounds because they're essentially stepping into international affairs. Two, that the tariffs were not unwarranted and that there is a purpose to it, and that there's going to be some sort of outline. Um, and then the third thing is really they need some guidelines. They need some things written on these tariffs that set some boundaries and some goals and standards. And that's really what the crux of this case is that these tariffs were very out of the blue. Uh, there's no real way to prepare around this because it was just kind of thrown on us. And that is true. It doesn't matter your political stance. That is absolutely true. Um, whether you wanted to be in this boat or not, you were thrown into this boat. A lot of these small business owners actually can't afford the tariff prices. Many of them are having to close down or lay off people right now. So, yes, this is absolutely a fair case. And I know many are going to say that this is some political attack. I do think there probably was a political agenda behind this, but from the actual business owner's point of view, they're very fair in their case. So, with that said, um, we have a couple different outcomes of what can happen. One, they could deny the stay, and that, like I said, that means that no tariffs, no new tariffs until essentially quarter one or quarter two of 2026. Uh, that's a minimum of 7 months away. Uh, just on the good outlook. If everything is filed correctly, if everything is filed on time, if everybody does their job on time and in a timely fashion, then this is the time frame we are looking at. Okay. Now, whether this gets done or not, the tariffs can stay in effect, okay? And if that stay is granted, if the CIT hears the DOJ argument, says that DOJ, this is a fair argument, while we figure out whether to deny or allow this appeal to go through, we will allow these tariffs to stay in place. But that also means that President Trump cannot engage any new tariffs without um, that guidance alongside the tariff, and that's uh, dates, percentages, what goals are for the tariffs, those type of things, so that people can really plan around the tariffs and um, prepare for the tariffs. And on both sides, there's good arguments. There's a very high possibility that the CIT court says that they will just deny the stay. Um, I read the entire 49-page docket. Yeah, it's really a toss-up right now. There's a massive possibility that we don't see any other tariff news until essentially 2026. The earliest we will see any news about this stay, and this does apply when the DOJ files it. They did file for the appeal, but they have to also file for the stay. They probably haven't filed for the stay yet, just because it does require a larger argument, which that is going to take a few days to prepare. That's pages and pages and pages of legal documents. Okay. Um, if that stay is decided upon, it's going to be at least 1 to 3 weeks from the time the DOJ files for the stay that we will hear from that. So the soonest we will hear from these tariffs is 1 to 3 weeks after the DOJ files for the stay. Okay, that is the absolute soonest we hear about the tariffs. Nobody else can do anything until that. There's no government organization. Nothing can get in the way of this process. Okay, this process is the legal process to do. Um, there's really no way around it. Uh, the Supreme Court will be getting involved at this stage. They can't get involved any sooner. Um, so what does this mean for the economy? Right? What does this mean for the market? This means that the original pump or the original rally we had up to 613 very likely is going to continue. The reason why it's going to continue, and if you were following me at the time, uh, we were having this rally, you know that there was a ton of momentum going into this. And I mean like an absolute ton of momentum. We were seeing 630 options being written by large funds. They were really preparing that 630 range until we started getting that tariff news. And second the tariff news really became a reality, we started just selling off massively. Once that tariff news started to be able to get priced in more, once we started to see some of the easing from the tariffs, uh, this entire range has been bought back up. So this is what we call a fair value gap. They are very hard to identify at first, but fair value gaps are essentially kind of like a bump in the road. And we're going to use drawings to show this for a moment. Maybe we won't. No, we won't use drawings. I want you to pretend that this is a line right here, and that this little bit of candle is sitting in this area right here. If there was no mention of tariffs or anything during this time, none of this selling would have happened. So this was created by, I won't say a black swan event, but that's kind of what we use to identify it. So just using the terminology, this was caused by a black swan event. Um, and because that was caused by a black swan event, it was not priced in. Because it's not priced in, it causes a very adverse reaction. And fair value gaps can go upward and downward. Okay, we've seen fair value gaps on the bullish side and fill downward on the bearish side. Okay, but it's kind of like a bump in the road. The road was intended to be flat and be traveled across properly, but over time something happened, caused a massive bump in the road, and after we got through that bump, we're now back on the road again. That's the best way I describe fair value gaps. Um, it's kind of like when we had the August sell-off right here. Yeah, this turned into a fair value gap when we started cutting rates and everything, and the buying just entirely filled that area. Um, I don't have other good examples right now, but I will talk about it sometime in another video. But this is a fair value gap. Um, And out of this fair value gap, we see very bullish structure. Okay. We've been talking about this cup getting filled in. I don't know why the cup decided to move on me. Okay. Nothing's working for me today, but we will just bask in the chaos and embrace it all rather than try to fight it. So, we have this cup right here that is forming. Okay. We have a cup top right here, which is a smaller cup. And we have a cup top right here. Okay. In this cup top right here, we had bearish structure, which gave us that handle. It wasn't a super large handle. I was really anticipating a 20 mod test to give us a really deep handle, but we did not get that. And out of this handle, or out of this cup, I mean, we now have a handle forming. And that handle is forming to push us back right into the major buying channel. Okay, and I won't show it in tonight's graph, or in tonight's chart, but this yellow channel is going to be expanding. We will be tagging the bottom of this support right here, and all of this will be within that larger channel now. Very, very likely we are going to break out of this selling channel within the next 2 days. I'm truly expecting about a 5% move in the next 2 days, including the overnight price we are seeing right now. Um, I am fully expecting to close the gap up at 613, and from that gap close, pushing all the way up to the 613 to 615 range. Now, let's go over our actual moving averages real quick so we can just get a gauge on that so that you can understand why that 610 range, 613 range is available. Our upper Bollinger right now is at 605.23, and that pulled down today actually, because we actually sold down today towards the end of the day, as you all remember. When we open tomorrow, this upper Bollinger is probably going to be around the 608 range. As we start pushing towards the upper Bollinger as well, it is going to be moving upward. So by the time we actually reach this range, it's very, very likely going to be in that 609 to 613 range, give or take, but it will be pretty much right at the top of that cup. Okay, going over upper Bollinger moves really quick, it's generally about a 4-day process. Day one is you secure the upper Bollinger, and that means you actually close into the level and hold the level. Day two is usually a higher high, and you slowly start consolidating into the 5 mile, and that's a very, very historical trend. I don't need to show that through the chart right now. You can check on your daily chart on SPY or pretty much anything big, and you will see that same trend. Okay, so I'm expecting the same thing here. I'm expecting over the next 2 days to pull up into this upper Bollinger. From that push into the upper Bollinger, I am looking for around that 609 to 613 range, potentially even a little further. And then we're going to start looking for bear structure to form in there, and then consolidation down into the 5 mile. That whole process is generally going to take about 4 days. Okay, the first 2 days is about pushing higher highs. The second 2 days is generally about the consolidation into the support. Does it always work that way perfectly? No. But the moves are consistent. Even here, when it was kind of dicey, we did get the 5 mile test there. It was slightly extended for a third day, but sometimes that happens. Now, quickly going over the moving averages, they don't really matter too much because we're going to blast off, and really there's no bear thesis right now. The CIT court case and everything should really absolve any bearishness in the short term. Um, I actually don't even have a bearish thesis right now against this. We would have to get an entire narrative change to shift this buying, and that's because the entire narrative did change. Okay, this is a totally new market from the last 6 months of trading, and that just formed as of a few hours ago. Um, expect a totally new market for the next few months. Um, this is not going to be a tariff threatening driven environment anymore. This is going to not be something where tweets are going to entirely uh, shift positions now. I think a lot of that is going to ease a little bit until we start hearing or start seeing some of these filings from the DOJ and start seeing this actual court process play out. But this is a very significant thing for the market. It's not something that, again, the president or really anybody can quickly change. It's going to be a process that takes time. Um, Time doesn't really help what Trump was trying to accomplish prior to this. I think that this court case is actually going to throw a massive wrench into President Trump's entire plan. Uh, whether you agree with President Trump or not, I think that this is kind of destructive for the economy. because I was actually going to discuss tonight about an entirely new thesis of where I was going to see the market heading, and this news entirely changed that. And I think this entirely just screwed Trump's plan. So, yeah, I'm gonna stop rambling now. I'm really not seeing bearishness in here. The only bearishness is very, very short term, and that's this cup forming. That's not a cup, hold on. That is this cup right here forming a handle to break upward. That's the only bearish thing we have going on, and as you can see, that's not bearish at all. That's just liquidity. Um, yeah, we should be seeing all-time highs. I don't know how else to better say it. There's nothing bearish right now in the market other than narrative points. And yes, I understand a lot of things are very heavy in weight, but um, this euphoria is more than real, and we're very likely going to see buying all the way up to all-time highs. Um, as I said, it would take a very massive narrative change to shift that buying because essentially this is saying, hey, market, there's no tariffs going on for a minimum of 1 to 3 weeks. And, potentially all the way up for, half a year to plus. For the dealers, that's exactly what they want. They don't want this tariff news. They want something they can set up positions around and not just react to. So I think the entire market can kind of, you know, uh, I can't think of the word relate with that. That's what I'm trying to say. So I'm gonna end the video here. I've been rambling for I don't know how long. I'm just upset that my first video didn't record properly because it was very good. Anyway, I will talk to you all tomorrow. Trade safe, and I will see you later.